Are you sometimes hesitant about jumping into an obvious stock breakout? Welcome to our latest MTG swing trading video where we delve into this very dilemma. Today we're focusing on the top 3 critical factors to consider when buying an obvious stock breakout, turning what seems to be risky into a calculated smart move. Join me as I use Nvidia and AMD to illustrate the fine line between a trap and a golden opportunity in breakout trading. We'll dissect why sometimes going for the obvious can be the winning choice. And here's something you'll want to stick around for. At the end of the video, I'll share a vital tip that can transform your stock selection when considering breakout buys. I'm Rick Pedicelli, head stock analyst at Morpheus Trading Group with over 20 years of experience in trading. I'm here to guide you through the complexities of breakout trading. Ready to enhance your trading skills? Hit like, subscribe, and join our MTG Tribe community for more insights and expert strategies. So first chart up here is Nvidia, and generally when you have a new trader and they've read say the classic O'Neill books on how to make money in stocks, it's full of breakout buying. There's several patterns, but most of the buy entries are on a breakout. So a new trader will read this book, get pumped up, and want to buy breakouts. And what generally happens is they'll buy some breakouts, and if the market's really strong, they'll make some money, and then maybe they'll come across a period where breakouts are tough, and they don't make any money on breakouts. Maybe the breakout works for an hour or two, and then completely reverses lower, and for 3 to 5 days, and can pull back 7 to 10% and run you out of your position. Eventually, the trader will sour on breakouts and find alternative ways to enter ahead of the breakout, which is good, and what we do all the time here. What we do all the time in our trading. We're always trying to look or identify lower risk buy entries well ahead of the obvious breakout point, as this allows us a bigger buffer that we can sit through any type of false breakout. However, sometimes when the situation calls for it, buying the obvious breakout that you may struggle with is absolutely the correct decision. And that was the case in Nvidia on January 8th as we purchased in our swing trading report, the Wagner Daily. We purchased Nvidia at 510, and the price action has already moved about close to 8% in our favor since the breakout entry. So why did we buy Nvidia? Well, when we attempt to buy this sort of obvious breakout, we're looking for a stock that is extremely liquid, a fixed stock that institutions can get size in. We're avoiding stocks that are maybe small and micro cap. We're looking for something that maybe does at least 50 to $70 million volume a day, probably well over 100 million, which is the case with Nvidia. It averages about 40 million shares a day at $500. It's plenty liquid. Institutions can grab size. Everyone can get size in Nvidia. The second thing we look for is a valid basing pattern. Now, Nvidia pushed off the lows of the pattern straight up to the highs here and actually pushed through the prior high and broke out on November 20th. But as you can see, there wasn't much of a pause prior to the breakout. It was straight up off the lows, no discussion, and no pulling back in, no handle, just straight up to the highs. So, and that type of breakout for us is tough to buy, no matter what, especially when there's several weeks of a rally that leads to the breakout. Now, if it's straight up off the lows from a gap and then 3 or 4 bars up and then shoots to a new high, that's a different story. But after several weeks, it's tough to buy the breakout here. So what we want to focus on is the fact that the price action goes from about 21% wide on the pullback. After this failed breakout attempt, it pulls back to the 50 EMA, about 10%. And on this pullback, it's about 6%, just shy of the 50 EMA. So this is a pattern that is tightening up from left to right, which is what we want to see on the daily chart. And note all this tightening up here is on declining volume. And this is basically the pattern building energy here, tightening up, ready to explode, which it does. So we have a valid basing pattern as well as a thick liquid stock. And then the third thing we look for when we're buying is big volume. Now, Nvidia closed with a 56% jump in volume over its average by the close. Now, you don't know that when you're buying at 9:30 or 10 a.m., that volume's going to come in above average. However, with Nvidia, when we purchased at 510, volume was running about 35% of average within the first half hour of trading and close to almost 100% of volume by the end of the first 2 hours of trading. So just before lunch, it was almost doing a volume that was equivalent to a full day's worth of trading. So that's big volume. So while we don't want to wait until the close for volume to confirm, if depending on the type of software you have, if you see that volume is running heavier than average, that is exactly what we're looking for. So when we bought Nvidia, the stock was already up about 3% or more on heavy volume. So that just gives us a certain comfort level that, hey, what's going to happen here? Volume strong, price is strong. This is worth taking a shot. Worst case scenario, we're out at the lows of the day if it fails to hold today. But generally speaking, such a strong move should hold up. And just for some reference here, we'll go to, on a bigger time frame, you go to the weekly chart, and you can really see how the price action tightens up from the false breakout. The price action prior to the false breakout, it was pretty loose here, 20%. And then just a nice few weeks here with the price action tightening up above the rising 10-week moving average. All right, let's head on over to our second example, and that is AMD. And I mentioned that we purchased Nvidia in our nightly report, the Wagner Daily. We missed the AMD entry here, but it's a great example, though, as it was a breakout that we should have bought. So again, looking at AMD, what do we have? A very thick stock, an institutional darling here, 65 million shares a day at over $100. So ton of liquidity. So that's out of the way. Then we're looking for a valid basing patterns. So we have this cup-like pattern here that corrects 30% off the highs, which is fine. Anything in the 25 to 35% range is normal for a cup. And then we have this strong move off the lows that actually does pause and forms a handle here. And so we have the cup, and then we have this handle, which is at least 5 days in length, which is a valid handle. Price action slopes lower, and then you have the breakout here. And the volume did confirm. It was 120% above average, I believe, on the breakout. Now, again, you're not waiting till the end of the day for volume to confirm, but I believe volume was about almost equivalent to a full day's worth of trading by noon. So pretty explosive price action, and the stock was up over 4% at the time of the breakout. So a powerful move. And that's exactly what we're looking for here. The price action followed through to the upside over the next few weeks, gaining about close to 20%. So this is exactly the type of breakout action where we want to participate in. And you could even pay up a little bit. Maybe if it's 2 to 3% above the handle high or the base high, you can still enter, maybe cut back share size a bit, or go with a tight stop beneath that day's low. Really depends on the type of trader you are, but I think the big volume and the strong price action should give or gives us that comfort level we look for when we're buying an obvious breakout. And as promised, we have a vital tip that can help improve your stock selection when buying breakouts, and that is to focus on the breakout buying in stocks that are a part of a strong industry group move. Try not to focus on that lone wolf, that one. We want the group to be strong. And in the case of Nvidia, AMD had already broken out. If you look at AVGO was already strong. So the group was showing a ton of strength. And that's what we want to see. At a minimum, you want to see, 3 patterns or more that are strong. That obviously depends on the group. Some groups have more stocks than others, so that'll help. But you definitely want to have these breakouts be part of a strong industry group move. All right, well, thanks for watching. Today we discussed how to buy an obvious breakout, what key characteristics we look for. We look for a thick liquid stock. We look for a valid basing pattern, and then we want to see big volume on the breakout. And then the last tip was make sure that the stock is part of a strong industry group. If you found these insights helpful, please show your support by hitting that like button and subscribing to our channel. For more in-depth analysis and to get our top swing trade setups with exact entry and exit points, visit morpheustrading.com and click on Stock Picks. Join the MTG tribe today and be a part of a community dedicated to successful trading. Thanks for joining me, and remember to trade what you see, not what you think.